Why your check gets held. Regulation CC explained 2025 update. Disclaimer. This video is for educational purposes only and does not constitute legal or financial advice. Always consult your financial institution for guidance specific to your situation. Ever deposit a check and wonder why your money isn't available right away? That delay might feel random, but it's not. It's thanks to a federal rule called Regulation CC, and as of July 1st, 2025, the rules just changed again. So let's break it down. Regulation CC comes from the Expedited Funds Availability Act, and it tells banks how quickly they must make your deposited funds available, especially for checks. Before Regulation CC existed, banks could delay access to your money for days or even weeks, leaving you guessing and sometimes bouncing payments. So the law stepped in to protect consumers by setting specific timeframes for when funds must be available and clear limits on when banks can delay them. Every 5 years, the Federal Reserve and the Consumer Finance Protection Bureau update the dollar amounts in Regulation CC based on inflation. The most recent update took effect on July 1st, 2025. Here's what's new. The next day availability amount went from $225 to $275. The large deposit threshold went from $5,525 to $6,725. The same $6,725 threshold now also applies to the new account exceptions hold. So, if you're depositing a large check or opening a brand new account, expect those amounts to be part of how the bank decides your hold period. When you deposit a check, your bank doesn't always get the money right away. It has to be collected from the check writer's bank, and that process can take time. To reduce fraud, banks may place a hold on your deposit. Regulation CC sets limits on how long they can hold it, but it also allows for exceptions. These include deposits over $6,725, accounts that are less than 30 days old, a history of overdrafts or return items, doubts about whether a check will clear, emergency situations like computer or communications failure. These are called safeguard exceptions, and they're perfectly legal under Regulation CC. So let's define a few terms. Depository bank. That's your bank, the one accepting the check. Paying bank. The bank the check is written from. Business day. A weekday when the bank is open. Next day availability. When part of your deposit becomes available the very next business day. Case by case hold. A delay that your bank applies based on a specific situation, not because of a set rule. And don't forget, under the updated rule, $275 from most check deposits must be available by the next business day. So let's say you deposit $1,500 of a personal check on Tuesday. Under Regulation CC, your bank might make $275 available on Wednesday and hold the rest until Thursday or Friday. But if it's your first ever deposit in a brand new account, the entire check might be held for up to 9 business days, especially if it exceeds the $6,705 threshold. If your check is placed on hold, don't panic. It's not random. It's Regulation CC in action. This rule exists to protect you and the banking system from fraud, while also guaranteeing access to your funds within a fair timeline. Always ask your financial institution about hold policies, especially for large checks or new accounts. And remember, these limits are adjusted every 5 years, so staying informed is part of staying financially healthy. If you learned something new, smash that like button, subscribe so you don't miss the next breakdown, and drop a comment.